All right. So I'm just going to do a quick run through of names to ensure everybody's fine.
The first sound they make is to simply let the world know they're here. And then it's our duty to help them show the world why they're here in the first place.
Give them every advantage with the Guardian Achiever, a plan that provides for their educational dreams and protects their health and life in the process. For more information, call 888-4LIFE to speak to an advisor or visit myguardiangroup.com. Should critical illness strike, don't let worry fill your head. Say hello to happiness and goodbye to worry with Guardian Life's new Ultimate Provider Plan. Secure your medical expenses in the event of critical illness ahead of time while benefiting from our investment portfolio and so much more. Give yourself and your family the peace of mind you deserve with Guardian Life's new Ultimate Provider Plan today. And live secure, live easy.
We know what you want to do more of, and it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences, knowledge. You want to care more. For yourself, for the people around you. We know you want to do more things in life, so Clarion does more for you. In choosing the right experts to meet your every need. In products and services to reach your goals. And now, we do more than any other bank, digitally, empowering you with new technology in the hands of best-in-class professionals for more convenient digital tools, a more seamless banking experience, and more precise financial solutions. Clarion does more to bring you, your family, or your business into a new world of banking, so you can do what you really want. To live more. Clarion.
Good morning, everyone. We'll be starting momentarily. Good morning, everyone. Thank you for joining. We'll be starting momentarily.
Shall we stand for the playing of the Jamaican national anthem? The annual general meeting of the National Commercial Bank Financial Group is now called to order. Mr. Secretary, can you declare that a quorum is present?
Mr. Meeting Chair, Lead Independent Director, I confirm that we do indeed have a quorum present. Let me add, Meeting Chair, that the meeting is being held in the same manner as last year as we continue to observe COVID-19 health and safety protocols. all directors are participating in this meeting, either present in person or online. And we also have several members of our senior management participating primarily online. Members, the directors have agreed, again this year, that the lead independent director, Professor Alvin Wint, being present in person, should chair the meeting. However, the board chairman is online and will in due course be invited by our lead independent director to give his remarks. And with that said, I turn back over to you, Professor Wint.
Thank you very much, Mr. Garcia. This is the second year that we have conducted our annual general meeting in this form. It certainly does allow our shareholders to participate online, and we are very happy that we have many shareholders who are online and willing to participate. Unfortunately, during this year, we have had several of our team members pass away. Individuals who have worked at the organization and have been unstinted in their efforts. We have also had individuals in our broader NCB family who have passed, and I would like to make special note of the passing of Mrs. Gloria Chen, the mother of our chairman, an extraordinary individual who has attended annual general meetings of this organization in the past. Let us pause for a moment of silence as we recognize the contribution and express our own heartfelt condolences to those team members and members of our wider NCB Financial Group family who have passed away during the course of this financial year. Thank you very much. And let me just list the names of the individuals of our team members who have passed. Andrea Lowe Garwood, Janet McLean, Alex Ashley, Carleen Smith-Walker, Avril Bailey, and Ripson Gordon. We do express condolences to their families. As our Secretary indicated, our board chairman is not physically with us. I indicated last year that in his 20 years of chairing the NCB Financial Group, last year was the first time he was not physically present at our AGM. Obviously, this year is the second. But the Honorable Michael Leachin is online. We have been having many online meetings, and our chairman is now available and will present to us his opening remarks to this annual general meeting. Could you unmute, Chair?
Okay. Can you hear me?
Yes.
Yes, we are hearing you.
Hello?
We are hearing
hear
you,
me?
Chairman. Yes, we are hearing you.
Okay, sorry. Oh, great. Thank you very much, Professor Wint. Ladies and gentlemen, thank you very much for being here. As Professor Wint said, it has been a difficult year. But we have had many losses, and our hearts and who all within our family who have suffered losses. This year actually represents the 20th anniversary of the marriage between AIC and NCB. So this is really a pivotal year years. It's an important, it's our 20th anniversary. So we're no longer a teenager. So I'd just like to take a few seconds to review what the conditions were like in the bank in Jamaica in 2002. Well, let's start off with the bank. The bank was generally regarded as a failed institution run by the government. It was regarded as non-competitive, in a far second place in terms of market share, bureaucratic, and no very, very amorphous leadership, low morale. So that was the condition, those were the conditions that the bank found itself in 2002. That was the bank. How about Jamaica? Our economy was lurching back then from crisis to crisis. Inflation ranged up to 50%. Interest rates found itself in the vicinity of 80% for periods. The stock market was comatose. GDP was flat. Crime was increasing. And the dollar was falling. It was 48-1 at the time. Unemployment was 20%. So what we had in Jamaica at the time was a bank that was really ugly, inefficient. We had an economy that was really ugly and also inefficient. So the question is, so why did I get involved with ugly and inefficiency? Why did I choose to get married to NCB? Well, because in life, although it's natural to gravitate to what is efficient and pretty, what is efficient and pretty won't create any wealth. In fact, it's ugly that creates wealth. If you can transform ugly to less ugly, or in more business terms, it's inefficiencies that create wealth. If you can transform something from being an asset, from being inefficient to being a little less inefficient, at the worst case, or the best case, efficient. So that was the big opportunity I saw with the bank and with Jamaica. And Jamaica, the bank in Jamaica, wow, fantastic. So we at AIC and ultimately Portland and ultimately myself, there are three preconditions that are important to us before we really get excited about a wealth creating opportunity. And all of us are shareholders here. This is an annual shareholder meeting. So we're going to talk about what is most pertinent to shareholders, which is creating wealth. The first precondition is you can't create any wealth unless there's a difference between perception and reality. The second precondition is, as is important to us, is you can't create any wealth unless there are inefficiencies or ugly. And the third precondition is that there must be a lack of capital. So when those three preconditions are present, wow, bingo. So those three preconditions were present in 2002 in the bank and in Jamaica. So again, bingo. So why did I buy the bank? Because the bank and Jamaica were both ugly and inefficient. That's what attracted me to the bank. And as I said, wealth is created when you're able to take an asset from being inefficient and ugly and make it less inefficient and ugly. So what are the results 20 years later? Well, 20 years later, we've seen a stock price that went from $3 to a little bit over 200 and now back to 130 approximately. So even from $3 to 130, even in a depreciating Jamaican dollar environment from 48 to 150, shareholders have done phenomenally well relative to their best alternatives. Secondly, results to date. On the results to date, investors were paid dividends ranging from a dividend yield of somewhere between 3.5% to 4% to up to 10% until 2 years ago when the pandemic hit. And thirdly, we have built an outstanding business that all Jamaica is proud of. And we set a standard in Jamaica, not only in running an outstanding business, but also being a great corporate citizen. Because you can't just operate, you can't be an island of success in a sea of poverty. So we take our corporate citizenry very importantly. So where are we today? For both the bank and Jamaica, where are we today, 2020, 2022. For both bank and Jamaica, we're still less inefficient than we were 20 years ago. But we're still inefficient. We're lesser so than we were 20 years ago, both Jamaica and the bank. We're still inefficient, but we're lesser so today than we were 20 years ago. And the three preconditions are still present in both the bank and Jamaica. Therefore, there's still a lot of potential to become less inefficient with time, or better yet, to go from less inefficient, which we are today versus 20 years ago, to less or efficient over the next 20 years. So, I will suggest to you, I will vouch to you that management and board realizes that we have a long way to go to become efficient or pretty. And we're committed to that journey, that challenge. And in so doing, we will create a lot more wealth than you have experienced over the last 20 years. Management and the board realizes that we have a fantastic platform today, not only in Jamaica, but across the Caribbean, which we did not have 20 years ago. Management and the board realizes that we have a fantastic reputation, built on integrity, built on trust. And we're going to use our reputation to make sure we go from being less inefficient to less inefficient, or better yet, efficient. Today, management and the board realizes that it has scale which we didn't have 20 years ago. The management team today is honed over the past 20 years to operate and succeed in challenging environments. And I'll say to you, as a board member, as a shareholder, we're committed to realize the fullest potential this institution has, going from being less inefficient or ugly to less inefficient on our way to becoming efficient and creating a lot of wealth for our shareholders, you and all of us who have shown commitment and towards their ownership of this institution. So, in summary, we're committed to harnessing all the advantages we have to protect your capital. We're committed to harness all our advantages and assets to not only protect your capital, to give you growth on your income. And thirdly, we're committed to harness all our assets and advantages to give you great income. Yes, great income. We will alight from this hiatus, this dividend hiatus, which is tough. I know. You all know that. Dividend that once we started, you will be able to count on. We appreciate the confidence you continue to have in us, and we promise we won't let you down. Thank you.
Thank you very much, Chairman. I would now ask Mrs. Julia Wang Brooks, who's the Executive Assistant in the Group Finance Division, to lead us in prayer.
Let us pray. Most gracious Heavenly Father, we thank you for the privilege of life. Lord, we thank you for the opportunity to come together in a fashion like this at our annual general meeting to discuss matters pertinent to the running of NCB Financial Group. We ask that you continue to bless the employees, that we continue to show ownership over our areas of responsibility. Lord, we ask that you continue to bless the shareholders and help them to have understanding and patience in times when it's needed most. And Lord, we ask that you continue to bless our chairman, our board of directors, our executives. Help them to have wisdom and courage, and help them to make decisions that are right, decisions that will take this noble institution into the unforeseeable future. Lord, we know that we can smile in the storm because you are in the vessel. Continue to be in this vessel as we say thanks. In Jesus' name, amen.
Amen.
Amen. Mr. Meeting Chair, we come now to the point in the meeting where we deal with the notice of meeting. However, a few preliminary issues, housekeeping, if you will, for members before we do so. I will ask that any members who may be viewing outside the AGM platform, for instance on YouTube, join the meeting through the link available on the myncb.com website, which will enable you members to participate in the meeting deliberations and, importantly, to vote. In terms of the procedures for the meeting and specifically for the taking of the resolutions, proposing and seconding the resolutions will be done by 2 members who are present in person. Questions and discussion on the resolutions will be taken through the question and answer functionality available online. The chat is not available, so if there is a question or a comment, please use the Q&A function. This will enable us to effectively ensure that all questions and comments are addressed in some way, whether in the meeting specifically or, if appropriate, through an answer to be provided after the meeting. Voting will take place, voting will take place online in the meeting, although some shareholders may have opted to vote beforehand, as I did. A court order and the amended provisions of the Companies Act of Jamaica have authorized us to use the voting procedures in this way and indeed to hold this hybrid AGM. Please note that voting will be available for 30 seconds on each resolution. We will have 30 seconds for voting and then 30 seconds for the tabulation of results. Our expectation is that the resolutions that you see on screen will match what is in the notice of meeting and the agenda and what will be read in the meeting as well. However, the specific wording of each resolution is as read in the meeting, regardless of whether the wording shown online or anywhere else is identical. As it has been agreed that the lead independent director should officially chair the meeting, he, as meeting chair, will be asked to declare whether resolutions have carried. He will, and in respect of the proposing and seconding of resolutions, we have the 2 persons present in person being Ms. Jacqueline DeLissa, our Head of Group Investor Relations, Performance Monitoring and Planning, and Mrs. Stephanie Nita, Assistant Secretary of this company and our Group Corporate Services Manager. They are both present in person, and they are the members who will propose and second each resolution. Now, having said that, let's put them to work. I will ask for a member to propose and another to second a resolution in respect of the notice of annual general meeting, namely, that the notice of this meeting as circulated be taken as read.
I, Jacqueline Deliso, propose.
I second the motion.
Thank you. The resolution now will be put to the vote, and so it should appear on shareholders' screens. Kindly note that in respect of this resolution, persons would not have been able to vote before. So if you had voted beforehand in respect of other resolutions, you will need to submit your vote on this one at this time. Well, that was a little more than 30 seconds, I think. But we do have our results. 20 votes in favor and 0 against. So, Mr. Meeting Chair, you could declare the result, please.
I declare the motion carried.
Thank you, sir. A number of proxies have been received, and a proxy register is available for inspection by interested persons who may contact our registrar, JCSD, should they wish to do so. Professor Wind?
One of the important elements of the accountability that we have to you, our shareholders, is to report on the financial and the business performance of our financial group. And I'm very pleased to indicate that we have our 2 key executives who are going to be providing those reports, beginning with Mr. Dennis Cohen, who is our Group Chief Financial Officer and Deputy Chief Executive Officer, who will report on financial performance, and then the Honorable Patrick Hilton, our Chief Executive Officer for the NCB Financial Group and President of NCBFG, will report on the business performance. Mr. Cohen, over to you.
Thank you, Chairman. Chairman of the Board, our Honorable Michael Leachin, Chairman of the meeting, our Lead Independent Director, Professor Alvin Wint, our President and Group CEO, the Honorable Patrick Hilton, shareholders, representatives of the media, my fellow NCB colleagues, ladies and gentlemen, good morning, and welcome to our 2021 Annual General Meeting. I will take you through our 2021 financial performance and briefly provide an outline of the results of our first quarter of the new financial year, which was released yesterday. I want to begin by thanking our staff and customers and other stakeholders for their continued dedication and support as we traverse these uncertain times. For the year ended September 2021, the group reported net profits of $20.1 billion, earnings per share of $6.25, and operating revenues of $121 billion. For the year, we focused on strategic transformation and continuous improvement to bring innovations to market and expand digital solutions. With increased digital processes and the use of data analytics, we will become more efficient and capitalize on the strengths of the group. While our regional economies continue to be impacted by the effects of the pandemic and global recovery remains uneven, we have a solid foundation to emerge stronger. We incorporated TFOB 2021 Limited, a fintech bringing new and innovative payment solutions to the market, as we play a role in driving financial inclusion in our society. For those who are not aware, TFOB stands for the Future of Banking. TFOB recently launched a mobile wallet solution in Jamaica, Link. Using Link, customers are able to use their digital wallet to send and receive money, as well as make payments to participating merchants. This version is the minimum viable product, so you can expect enhanced features and capabilities going forward. Last November, the group, through Guardian Holdings Limited, launched ALMI, a digital startup focused on helping customers to better protect their assets by simplifying insurance and offering innovative products. Through the use of cutting-edge technology, ALMI is able to help clients to get a quote and purchase a policy through their smartphone in as little as 20 minutes. In response to the challenges confronting us, we have proactively initiated strategies to ensure business continuity, recovery, and growth post-pandemic. Based on our assessment of the market conditions and internal factors, we concluded it was optimal to continue bolstering our capital base. We are confident the strategies we have undertaken will enhance our capabilities and strengthen revenue streams and position us to rebound as we pursue our vision of becoming a Caribbean financial ecosystem. As I indicated earlier, the group reported net profits of $20.1 billion for the 2021 financial year, with $14.2 billion attributable to our shareholders, representing a 25% or $4.9 billion decline from the prior year. Net operating income grew by 11% or $12.3 billion to $121.1 billion, our highest in history. Banking and investment activities recorded $98.1 billion for the period, improving by 21.8 or 29%. Gains on foreign exchange and investment activities increased by $14 billion, more than double the amount recorded in 2020, reflecting significant market recovery. Another area of notable improvement compared to the prior year was credit impairment provisioning. You will recall from prior briefings, I advised that we took a conservative approach to provisioning, adjusting our ECL assumptions to the worst-case scenario during the 2020 financial year. Given the improvements in economic conditions and observed portfolio quality, our forecasting is no longer heavily weighted to the worst case. The economic forecast predicts recovery in a number of jurisdictions, resulting in an update of the key assumptions, creating a 67% improvement in credit impairment provisions, representing a decrease of $6.9 billion compared to 2020. Many of our markets experienced an accommodative monetary policy, which led to reduced interest margins and consequently lower net interest income despite the growth in our loan and investment portfolios. The net results from insurance activities declined by $9.5 billion or 25%. Much of this is related to the impact of the pandemic on consumer and business activity. Our life insurance business in Jamaica had experienced increased mortality claims on account of low vaccination rates, while our Trinidad business has experienced persistency challenges on account of the economic impact of the COVID-related lockdowns. Nonetheless, the integration of our life insurance and annuity portfolios acquired by Guided Life Jamaica from NCB Insurance contributed to improved year-on-year results. Operating expenses of $94.9 billion increased by 13.3 or 16%. Staff costs accounted for $4 billion of this growth due to annual increases in salaries and benefits and incentive payments related to the prior financial year. Our investments in digital transformation contributed significantly to this increase. The increased cost outpaced revenue growth, resulting in our cost-to-income ratio of 76.2%, up from 68.5% in the prior year. The reduced profitability also led to a fall-off in our return on assets and return on equity, down to 1.08 and 8.97 from 1.57 and 12.57% respectively in the prior year. There was some shift in the geographic distribution of the group's operating income relative to 2020. Operating income earned in Jamaica was 55%, up from 39% in the prior year, while Trinidad and Tobago accounted for 15%, down from 26%. There is also a decline in operating income from the Dutch Caribbean at 8% compared to 17% in the prior year. Looking briefly at the segment performance, 4 of our 5 banking and investment businesses segments recorded growth over the prior year, while both of our insurance segments, life and general, declined. The wealth and treasury segments recorded noteworthy improvements due to the rebound of the securities market. The wealth segment recorded an operating profit of $11.2 billion, increasing by 82% or $5 billion, while treasury contributed 10.7, increasing by 3.8 billion or 55%. Our corporate and commercial and also our consumer and SME banking segments also improved year over year, having benefited from lower ECL provisions mentioned earlier. The insurance segments, life and also P&C, declined by 4.1 and 1.4 billion respectively, contributing 19.6 and 4.9 billion dollars to operating profit. In addition to the impact of the pandemic mentioned earlier, there is also increased underwriting expenses from actuarial adjustments, increased claims and annuity payments, as well as higher commission expenses incurred in 2021. We continue to remain optimistic on the prospects of all our business segments, as we are seeing positive trends all across the region and a gradual reopening of various sectors of the economy. You will see from our statement of financial position that our asset base was $1.9 trillion, an increase of $121 billion or 7% over the prior year. The growth in the asset base was primarily due to a 16% and 7% growth in loan and investment securities respectively. Our equity increased by 3% to $161 billion due to increased fair value reserves and also retained earnings. Customer deposits continues to grow steadily, increasing by 12% to $647 billion, underscoring our customers' trust and confidence in the group, while our policyholders' liabilities grew to $433 billion, a 7% increase over the prior year. We should also note that all our regulated entities met their capital and liquidity requirements. That concludes the 2021 review, and I will now briefly share our first quarter results released yesterday. The group reported a net profit of $5.4 billion for the quarter. The net profit attributable to shareholders was $2.6 billion, $1.3 billion or 33% below the prior results, and $1.7 billion or 39% lower than the September quarter. Operating revenue for the quarter totaled $34 billion, reflecting a 1% or $229 million growth compared to the prior year. The net results from banking and investment activities reflected a marginal decline of $483 million. This was mainly attributable to a $4.8 billion reduction in gains from securities dealings and foreign exchange transactions, and also a $700 million increase in credit impairment provisions. These variances were, however, largely offset by increased net interest income and higher fees and commission income due to growth in our performing loan portfolio, coupled with higher transaction volumes in our payment services business, reflecting the increased economic activity. There were also gains from the sale of property, plant, and equipment as we reduced our footprint by streamlining our Jamaican banking operations. The net results from insurance activities reflected a $712 million increase over the prior year. This year-over-year growth was due to a $4.3 billion or 15% growth in underwriting income, which was in turn attributable to a $2.2 billion increase in premium income from annuities in Guardian Life Jamaica. Also a $700 million increase from P&C from Guardian General Trinidad, and $450 million increase in our insurance in Fathom in the Dutch Caribbean. These were partially offset by P&C claims. The most significant were 90% covered by reinsurance arrangements. There was also increased reserves in both our life and P&C businesses. Operating expenses were $27 billion, reflecting a year-over-year increase of $1.4 billion or 6%. This was driven by increased asset tax and professional and consulting fees. We also note that our cost-to-income ratio now stands at 75%, up from 73%. A review of our segment performance shows 4 of our 7 business segments reported improved results over the prior year. General Insurance achieved an operating profit of $4.2 billion, up $2 billion or 92% over the prior year, mainly due to a general improvement in property and casualty business. Consumer and SME Banking reported an operating loss of $322 million, reflecting a $308 million improvement compared to the loss reported in the prior year. This segment's improvement was mainly due to a $500 million improvement in net interest income and a similar increase in net other operating income. The increase in net interest income reflects the increase in our loan portfolio amidst an environment of increasing interest rates. The Corporate and Commercial Banking segment reported a $374 million increase. Operating income, less direct expenses, was flat year over year. However, this segment benefited from lower allocated expenses. Our Wealth segment reported operating profit of $2.2 billion, a reduction of $1.4 billion or 38%, mainly due to a fall-off in gains from investment activities. Life, Health and Pension contributed $5.1 billion to the group's results, a reduction of $1.1 billion compared to the prior year. The group continues to be well capitalized, as all our regulated entities satisfied their regulatory capital requirements. Our deposit portfolio reflected an 18% increase as consumers continue to display confidence in our group. As at December 31, 2021, total assets and equity stood at $2 trillion and $164 billion respectively, with our book of loans and investment activities showing commendable year-over-year growth. The major Caribbean territories are expecting growth over the next 2 to 3 years. Increased vaccination rates will allow governments to continue easing restrictions and firms to increase business activity and rehire workers, driving private consumption. High inoculation rates and economic recovery in key source markets will also foster an improvement in the region through strengthening activity in tourism, increased export demand, and remittances, which should further bolster private consumption. I'm excited about the future. As we look forward to our 185th anniversary, the evolution of the group will continue apace. Our record bears testament to our history of strong performance, innovation, and resilience, and augurs well for our creating an even brighter future for our employees, customers, and shareholders. We have no doubt we will emerge from this pandemic more resilient, and will achieve this by continuing to build an environment that creates inspired people, delights our customers, delivers strong financial results, and is digital to the core, the pillars of our bold strategic aspiration. In closing, ladies and gentlemen, let me again express my sincere appreciation and gratitude to our team for their tremendous effort, and to our shareholders and customers, we thank you for your continued support and trust in allowing us to serve you. And with that, I hand over to our President and Group CEO, Mr. Hilton.
Thank you very much, Dennis. I appreciate it. Let me start by saying good morning to our Group Chairman, Honorable Michael Leachin, who addressed us earlier, our meeting chairman, Professor Alvin Wint, who also addressed us earlier, to fellow directors, valued shareholders of NCB Financial Group, to NCB Financial Group team members, members of the media, members of the analyst community. It is indeed a pleasure to welcome you all to this year's virtual annual general meeting. This format that was novel and a means of pivoting last year, as Professor Wint mentioned earlier, has now become a part of our new normal because of the benefits that it brings. It is expected that even when we return to physical meetings with shareholders, there will be retained a virtual option for those who wish to participate and vote in these proceedings using that medium. I make this point because while some may have embarked on temporary changes as we waited for a return to normal, the NCB Financial Group has taken the view that the majority of the changes we are experiencing are fundamental to our thriving in the new normal. Consequently, ladies and gentlemen, we are not waiting for a return to normal, but rather we are planting seeds and laying the foundation for organization to thrive in any context, in any set of circumstances. For those of us that have been watching, we know that the pandemic is not the only thing that is shaping a new global normal. Cryptocurrency, NFTs, Web 3.0, climate change, and ESG activism are just a few game-changing and disruptive shifts that have accelerated in this period. So, ladies and gentlemen, we have not been waiting. We know there is no value in waiting. We have been living with the pandemic as we work towards ensuring that the NCB Financial Group, which celebrates its 185th anniversary this year, is around to celebrate another such monumental occasion 185 years from now. At the end of the day, fellow colleagues and shareholders, a company with the best interests of its stakeholders at heart must be focused on a long-term viability. And so pressing ahead in spite of current challenges is always for us an imperative. As we celebrate this monumental milestone of 185 years, I'd like to pause to recognize and give thanks for the generations of employees, customers, shareholders, and others who went before us. We stand on their shoulders, and we commit to continue to build their legacy as well as our legacy. In the true spirit of the NCB Financial Group, we will forge ahead in this uncertain environment because we know it is a fact that the brave may fall, but one thing we the brave never do is yield. We don't know how to give up. As we navigate our new reality, we may have to at times take different routes from that we previously planned. We may have to take different pathways, but our destination, as my colleague Dennis Cohen mentioned earlier, of becoming a world-class Caribbean financial ecosystem remains the same. We are unwavering in that regard. And yes, we can. And yes, we will. We promise you that. Our corporate purpose of empowering people, unlocking dreams, and building communities has taken on special significance during these times and fueled much of our work for the 2020-2021 financial year. Across the group, we pledged a record $300 million in donations to support individuals and communities in need. I take this opportunity to thank our team across all businesses we own and operate and across the 20+ territories in which we are represented for their hard work, their dedication, and their resilience. I am proud of how we have rallied to support each other and our customers, even while dealing with our own personal losses of colleagues and of loved ones. I believe our team of innovators and world-class leaders have done a fantastic job of unmasking the opportunities disguised as challenges since the pandemic start. The great Albert Einstein once said, and I quote, "In the middle of difficulty lies opportunity," end quote. We as a team have demonstrated that time and time again over the past 20 years. My view, ladies and gentlemen, is that this unpredictable period of history is also the greatest period of opportunity for transformation in science, in business, in education, in financial services, and in humanity. But to capitalize on this opportunity and navigate the new normal, I recommend that we need to do these three things. One is to be guided by our purpose. For us at NCB Financial Group, this is embodied in our strategy and in our aspirations. Two is to avoid waiting for the right time. Quite frankly, the right time is now. Three is to be bold and take big leaps. Notice I didn't even say big steps, big leaps, ensuring that we are fearless but skillful in our execution. I will speak to each briefly. Remain guided by our purpose. As I shared earlier, our organization's purpose statement says we are about empowering people, unlocking dreams, and building communities. The people we empower include employees, includes customers, shareholders, and individual citizens of every territory in which we are present. At the heart of many of these persons' personal and professional goals is the need for financial resources, the need to obtain those resources in a frictionless way, as well as guidance on how to achieve their goals. This purpose is embedded in everything that we do. And so I will highlight this morning two initiatives. NCB Merchant Bank, Trinidad and Tobago Limited, formerly NCB Global Finance Limited, has become a member of the Trinidad and Tobago Stock Exchange, the TTSE, and is focused on helping family-owned businesses, of which there are many in Trinidad, to list on that stock exchange. This creates wealth opportunities for retail investors as well as the small business owners. Our RevUp program, launched this year, will see us provide intense capability building for startups and more established SMEs, while we also continue to create new financing options that are easier for them to access. In providing these services to empower our customers and unlock their dreams, there are many of those services we provide free of charge. When we do charge, it is a reflection of the partial recovery of the cost of providing the service and we will always be transparent about what those costs are, and at the same time provide our customers with alternatives which are lower cost or no cost. 2, I mentioned avoid waiting for the right time. It's a recognition that there's really no time like the present. I would have shared this lesson in a recent talk I gave with members of the Guardian sales team. The biggest reason, ladies and gentlemen, to avoid waiting is because of the law of compounding. Albert Einstein is said to have called compounding, and I quote, the most powerful force in the universe. We all know about the financial benefits of the law of compounding. Someone who starts saving $5,000 per year at age 25 will wind up with more than twice as much by age 65 than someone who waits until 35 to start saving that amount at an annual return of 8%. The person who starts saving at 35 will need to save approximately $11,000 per month to achieve the same savings pool at the age of 65. However, the law of compounding, my friends, applies beyond our finances. Cumulative small changes make a difference over time, but the earlier you start, the better, because the later you start, the more effort you will need to exert to achieve the same outcome. In his book, Atomic Habits, by James Clear, he says, and I quote, "The secret to getting results that last is never to stop making improvements. It's remarkable what you can build if you don't stop. It's remarkable the business you can build if you don't stop working. It's remarkable the body you can build if you don't stop training. It's remarkable the knowledge you can build if you don't stop learning. It's remarkable the fortune you can build if you don't stop saving." So don't stop. Because of the law of compounding, the value in starting small and starting early clearly outweighs the cost of waiting. There is a cost in waiting for the pandemic to end to pursue goals and dreams and opportunities. Those who do so are missing out on the benefits of compounding their skills, their knowledge, their finances, and much more during this period. The third lesson I mentioned was take big leaps. Those who know me well know by now one of my favorite quotations is by the architect Daniel Burnham, in which he states, and I quote, "Make no little plans. They have no magic to stir men's blood, and probably themselves will not be realized. Make big plans. Aim high in hope and work, remembering that a noble, logical diagram once recorded will never die, but long after we are gone will be a living thing, asserting itself with ever-growing insistency." End quote. Marianne Williamson in Our Deepest Fear said, and I quote, "Our playing small doesn't serve the world." Basil King said it well when he said, and I quote, "Be bold and mighty forces will come to your aid." So while this time has been uncertain, we have not played small. Being the first to pilot the central bank digital currency and launching our startup Link, which Mr. Cohen mentioned earlier, are just a few of the big bets we are making. Each of these are true to our purpose. They will empower citizens and accelerate financial inclusion. There are also mechanisms for us to transform our business model to ensure our viability for the long term. As I shared earlier in my remarks, while we now celebrate 185 years, we are also working earnestly to ensure we will achieve massive success and be around for another such milestone. This is how we are moving forward, ladies and gentlemen. We are moving forward with purpose. We are not waiting. We are taking big leaps so that we can continue to thrive in any set of circumstances. I am grateful for each customer, for each shareholder, for each employee, for each stakeholder. I thank you for your support over the years. I look forward to you continuing on this journey with us. And I thank you for your participation and sharing with us this morning. Thank you again.
Shareholders, I am sure that you would like me, on your behalf, to thank Mr. Cohen and the Honorable Patrick Hilton for their presentations and also for their admirable stewardship of this organization, particularly through the turbulent times that we have been experiencing over the past 2 years. At this point, I would like to ask the Secretary to proceed with the formal business of this meeting.
Thank you, Mr. Meeting Chair. So we will now indeed move on with that formal business, the first item being in relation to the audited accounts. The audited accounts have, of course, been circulated, and I now call upon Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report.
Morning. Thanks very much, Dave. Independent Auditor's Report to the members of NCB Financial Group Limited. Report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statement and the standalone financial statement give a true and fair view of the consolidated financial position of NCB Financial Group Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as of September 30th, 2021, and of their consolidated and standalone financial performance, and their consolidated and standalone cash flow for the year then ended in accordance with International Financial Reporting Standards, IFRS, and with the requirement of the Jamaican Companies Act. We have audited the group's consolidated and standalone financial statement comprise the consolidated statement of financial position as of September 30th, 2021, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended, the statement of financial position as of September 30th, 2021, the statement of comprehensive income for the year then ended, the statement of changes in equity for the year then ended, the statement of cash flow for the year then ended, and the notes to the financial statement, which includes significant accounting policies and other explanatory information. Basis for opinion. We conducted our audit in accordance with International Standard on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibility of the audit of the consolidated and standalone financial statement section of our report. We believe the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Code of Ethics for Professional Accountants, including International Independence Standard, issued by the International Ethics Standard Board for Accountants, the IESBA Code. We have fulfilled our other ethical responsibility in accordance with the IESBA Code. Our audit approach. Audit scope. As part of designing our audit, we determine materiality and assess the risk of material misstatement in the consolidated and standalone financial statements. In particular, we consider where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audit, we also address the risk of management override of internal controls, included among other matters, consideration of whether there was evidence of bias that represented a risk of misstatement due to fraud. How we tailor our group audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. We determine the scope of our audit by first considering the internal organization of the group. and then identifying the components of the audit that have the most significant impact on the consolidated financial statement. The group comprised 51 reporting components, of which we selected 23, which mainly represent the principal business unit within the group and are located in Jamaica, Bermuda, Trinidad and Tobago, and the Dutch Antilles. Full scope audit were performed for 12 components, while audit of Trinidad and Tobago and the Dutch Antilles, one or more financial statement line items were performed for 11 components. The audit work performed covered 96% of the group total assets, 98% of total revenue. For a business unit located in the Dutch Antilles, we use component auditors from a non-PwC firm who are familiar with the local laws and regulations to perform this audit work. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statement of the current period. Those matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole, and informing our opinion thereon. And we do not provide a separate opinion on these matters. We have determined that there are no key audit matters as it pertains to the standalone financial statement in our report. The first key audit matter, IFRS 9, financial instruments, probability of default, forward-looking information, and significant increase in credit risk for the group. See notes 2I, 21, and 22 of the financial statement for disclosure of related accounting policies, judgment, estimates, and balances. As of September 30, 2021, the group's loan and advances total 539 billion. The group's investment security measured at amortized cost and fair value through other comprehensive income total 691 billion. In aggregate, the above exposure represents 64% of total assets at the reporting date. The resulted impairment recorded under the expected credit loss, the ECL impairment model, amounted to 15 billion for loan and advances and 938 million for debt securities. In assessing impairment, IFRS 9 prescribes a forward-looking ECL impairment model, which takes into account reasonable and supportive of forward-looking information as well as the probabilities of default, the PD. Probabilities of default represent the likelihood of a borrower defaulting on its obligation over the next 12 months or over the remaining lifetime of the obligation. The 12-month and lifetime PDs are determined differently for loans and investments. For investment securities, which include debt securities comprising sovereign and corporate securities, PDs are developed by reference to external data collected by Standard & Poor's, S&P, with adjustment for industry and country-specific risk where appropriate. For loans and advances, management developed PDs based on the group-specific historical default rate for each industry classification. In performing historical analysis, management identify economic variables impacting credit risk and ECL for each portfolio. The ongoing economic impact of COVID-19 continued to result in significant increase in credit risk for a number of borrowers for debt securities and loans and advances, which migrate from stage 1 to stage 2 classification. This was based on an assessment of the industry in which the borrower operates and other relevant factors. In the event of a significant increase in credit risk, an allowance or provision is required for ECL, resulting from all possible default events over the expected life of the financial instrument. That's the lifetime ECL. The estimation and application of forward-looking information requires significant judgment. Stage 1 and Stage 2 credit losses allowances are modeled based on macro variables or changes in macro variables, which most closely correlate with credit losses in the relevant portfolio. Each macroeconomic scenarios in ECL calculations incorporate forecasts of the relevant macro variables. The estimation of ECL in Stage 1 and Stage 2 is a discounted probability weighted estimate that considers a minimum of 3 future macro scenarios. The base scenario is based on macro forecasts, which are publicly available. Upside and downside scenarios are set relative to the base scenario and based on the reasonable possible alternative macro conditions. Additional adjustments to the best case, and the worst case scenario weighting are required as a result of the ongoing COVID-19 pandemic. We focus on this area due to the impact of COVID-19 on credit risk, the complexity of technique used to determine the PDs, to identify significant increase in credit risk, and the number of significant judgments made by management regarding the possible future economic scenarios as it pertains to debt securities, loans, and advances. How we audit address this key audit matter. Our approach to addressing this matter with the assistance of our evaluation specialists involved the following procedures, among others. Update our understanding of management ECL model, including any changes in source data and assumptions. Test the completeness of all loans and advances and debt securities to determine whether all items were included in the ECL model by agreeing the model to detail loan and security listing. We also evaluated the reasonableness of management judgment pertaining to PDs, significant increase in credit risk, and forward-looking information, including macroeconomic factors impacting the weighting of the scenarios due to the negative impact of COVID-19, as follows. For debt securities, PDs, we tested the critical data fields used in the ECL model, such as the maturity date, amortized costs, accrued interest, credit rating, and interest rate by tracing data back to the relevant source documents. We also agreed credit rating and historical default rate to calculate the PDs on a sample basis to external sources such as rating agencies. For the significant increase in credit risk, we tested on a sample basis the accuracy of the initial credit risk and the credit risk at the reporting date using rating agency, definition of investment grade, and evaluated the appropriateness of the group's classification of debt security as Stage 2. We also performed an independent qualitative assessment for a sample of the borrowers to determine if there was any adverse public information affecting the criteria used to perform the staging. We also inspected the financial statement of sample borrowers to determine if there was any significant downturn in financial performance before and during the pandemic. This aided in assessing the staging of borrowers, particularly for those who requested forbearance as a result of COVID-19. With respect to loans and advances, for the PDs, we tested the critical data fields used in ECL model for PDs determination, such as default rate, effective interest rate, write-off data, and loan type by tracing data back to source document. We also reperformed the calculation of days past due, a key data input into the PD parameters in the group's banking system on a sample basis. For significant increase in credit risk, we also evaluated the staging of loans and advances by identifying the industry severely impacted by the pandemic. These were identified based on restrictions imposed by government across the group's operation. Compare our results to those identified and classified by management. We also tested whether the loans of borrowers from these industries migrated to stage 2. For forward-looking information, debt securities, and loan and advances, we assess the reasonableness of the group's methodology for determining economic scenarios, considering industry and component-specific facts and circumstances within each of the jurisdictions that the group operates. We also evaluate the reasonableness of the increase in the weighting used for the worst-case scenarios by agreeing the forward-looking economic information to external sources published or pronounced by reputable third parties. We sensitize the probability weighting used in the ECL calculation. The results of our procedures indicate that the assumptions used by management for determining the probability of default, significant increase in credit risk, and forward-looking information were not unreasonable. The second key audit matter, methodologies and assumptions used for determining insurance contract liabilities for life insurance and annuity contract for the group. See notes 2 and 39 to the financial statement for disclosure of related accounting policies, judgments, and estimates. As of September 30, 2021, the reserve for life insurance and annuity contract accounted for $384 billion, or 22% of the total liabilities of the group. Economic assumptions such as investment return, associated discount rate, and borrowing rates, policy expense, and assumptions such as mortality and persistency are key inputs used to estimate long-term liabilities. Management used internal and external actuaries, experts, to assist in determining these assumptions and in valuing these actuarial liabilities. Based on management assessment, COVID-19 did not have a significant impact on the liabilities for life insurance and annuity insurance contract. We focus on this area because the valuation of the provision for the settlement of future claims involve complex and subjective judgment about future events, both internal and external to the business, for which small changes in assumption may result in significant impact to the valuation of these liabilities. Our audit work addressed this key assumption by our approach in assessing the matter with the assistance of our actuarial specialists involved the following procedures, among others. We tested the completeness, the accuracy, and the reliability of the underlying data utilized by management to support the actual valuation. We also tested a sample of the contract to assess whether contract features and demographic data correspond to the data file given by management to its actuary. We also evaluate the methodology and assumption utilized by management actuary expert, considering the industry and the component-specific facts and circumstances. Specific areas of focus were mortality assumption, contract lapses, investment return, and associated discount rate, and policy expenses, all of which are based on the entity experience or publicly available information. The result of a procedure indicates that the assumption used by management for determining insurance contract liability for life insurance and annuity contract were not unreasonable, and the methodologies used were actually established and accepted and appropriate in the circumstances. The third key audit matter is goodwill impairment for the group. See notes 2O, 2I, notes 28 to the financial statement for disclosure of the relevant accounting policies, judgment, estimates, and balances. The total carrying value of goodwill is $20 billion, or 1% of the total asset as of 30 September 2021. In accordance with IAS 36, impairment of assets, management perform an annual goodwill impairment assessment to determine whether the carrying value exceeds the recoverable amount of the cash generating unit to which the goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of a CGU is calculated as the higher of the value in use and the fair value less cost of disposal. Management determine the recoverable amount by reference to value in use, which is based on discounted cash flow projection, over which management makes significant judgments on the key inputs. As a result of the assessment, management determined that there were no impairment as of September 30th, 2021. We focus on this area as the goodwill impairment assessment requires management's significant judgment and estimate, is sensitive to key changes in assumptions, and due to changes involved in determining the impact of COVID-19 on those assumptions. The key assumptions were assessed by management as being the revenue growth rate, the projected reinsurance, the claims ratio, the projected expenses, the terminal growth rate projections, and discount rate. We address this key audit matter by our approach in addressing the matter with the assistance of our specialists involved the following procedures, among others. We update our understanding of management's approach to performing their annual impairment assessment. This included updated our understanding of the process by which management key assumptions and methodologies were developed and assessing their appropriateness. We compare previous forecasts to actual results in order to assess the performance of the business and the extent to which reliance could be placed on management's ability to forecast. We also assess whether the 3-year forecast used in the valuation model was consistent with the board-approved business plan, and the key assumptions were subject to oversight from the board of directors. We tested the key assumptions, including the impact of COVID-19 on those key assumptions as follows. We evaluated the revenue growth rate and the discount rate against valuation of similar companies with the assistance of our valuation expert. We compared the key assumptions to externally derived data where available, including market expectation of investment return, projected economic growth, terminal growth rate, and interest rates. We also agreed the projected claims and expense ratio and reinsurance to audit financial information and assess for reasonableness in light of the current economic climate and market outlook. We also tested the calculation of mathematical accuracy and assessed the sensitivity of the calculation by varying the key assumptions and adjustment within management cash flow forecasts. The results of our procedure indicate management determination that goodwill was not impaired at the reporting date was not unreasonable. The final key audit matter relates to the valuation of unquoted corporate debt and government securities classified as fair value through profit or loss, fair value through other comprehensive income, and pledged assets for the group. See Notes 3A, 23, and 50 to the financial statement for disclosure on related accounting policies, judgments, and estimates. As of 30 September 2021, the unquoted corporate debt and government security classified as investment at fair value through profit or loss, or fair value through other comprehensive income, and pledged assets together account for $50 billion, or 3% of the total assets of the group. These securities are classified and disclosed as level 3 within the fair value hierarchy as one of the more or significant input is not based on observable market data. For unquoted corporate debt and government securities, management uses valuation techniques which utilize the application of market yield curve adjusted by a risk premium to discount the contractual cash flow of the instrument. We focus on this area as the yield curve is an unobservable input requiring management judgment and estimation, which is subject to high estimation of uncertainty. Our approach in addressing this matter with the assistance of our valuation expert involve the following procedures, among others. We update our understanding of management approach to performing the fair value assessment. This included updated our understanding of the process by which management key assumptions and methodology were developed and assessing their appropriateness. We also tested the source data inputs using the valuation model by performing confirmation procedures on a sample basis and agree the issuance date, maturity date, coupon rate, and risk premium at the issuance of source documentation. We also developed independent territory-specific yield curve using industry data and experience and compared to management yield curves. We tested on a sample basis the contractual cash flow of the underlying security by comparing to source documentation and evaluated the impact of any variation. The results of our procedure indicated that the assumptions used by management for determining the fair value of unquoted corporate debt and government securities were not unreasonable. Other information. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statement and our auditor's report thereon, which is expected to be made available to us after the date of this audit report. Our opinion on the consolidated and standalone financial statement does not cover the other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information identified above when it becomes available, and in so doing, consider whether the other information is materially inconsistent with the consolidated and standalone financial statement or our knowledge obtained in the audit, or otherwise appear to be materially misstated. We have read the annual report. If we concluded that there is a material misstatement therein, we are required to communicate the matters to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statement that give a true and fair view in accordance with IFRS and with the requirement of the Jamaican Companies Act, and for such internal controls as management determine is necessary to enable the preparation of the consolidated and standalone financial statement that are free of material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group and the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern and using the going concern basis of accounting unless management either intends to liquidate the group or the company or cease operation or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company's financial reporting process. The auditor's responsibility for the audit of the consolidated and standalone financial statement. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that our audit conducted in accordance with ISAs would always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence economic decision of our users taken on the basis of these consolidated or standalone financial statements. As part of our audit in accordance with ISAs, we exercise professional judgment, maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement of the consolidated and standalone financial statement, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. We obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal control. We evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosures made by management. Conclude on the appropriateness of management use of going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to events or conditions that may cast significant doubt on the group's or the company's ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention to our audit report to the related disclosure in the consolidated and standalone financial statement, or in such disclosures are inadequate to modify our opinion. Our conclusions are based on the audit evidence obtained up to the date of our audit report. However, future events or conditions may cause the group or company to cease as a going concern. We evaluate the overall presentation, structure, and content of the consolidated and standalone financial statement, including the disclosure, and whether the consolidated and standalone financial statement represent the underlying transactions and event in a manner that achieves fair value presentation. Obtain sufficient appropriate audit evidence regarding the financial information of the entities or the business activities within the group to express an opinion on the consolidated financial statement. We are reasonable of the direction, supervision, and performance of the group audit. We remain solely responsible for our audit opinion. We communicate to those charged with governance regarding, among other matters, the planned scope, the timing of the audit, and significant audit findings, including any significant deficiencies in internal controls that we identify during the audit. We also provide those charged with governance with a statement that we have complied with all relevant ethical requirements regarding independence, and to communicate with them all relationship on all matters that may reasonably be thought bear on our independence, where applicable actions taken to eliminate these stress or safeguard apply. From the matters communicated to those charged with governance, we determined those matters that were of most significance in the audit of the consolidated and standalone financial statement of the current period and are therefore the key audit matters. We describe these matters in our audit report unless laws or regulation precludes public disclosure about matters, or when in extremely rare circumstances we determine that a matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefit of such communication. Report on the legal and regulatory requirement. As required by the Jamaican Companies Act, we have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been kept so far as appear from our examination of those records, and the accompanying consolidated and standalone financial statement are in agreement therewith, and give the information required by the Jamaican Companies Act in a manner so required. The engaging partner on the audit resulting in this independent auditor's report is Paul Williams, signed PricewaterhouseCoopers Chartered Accountant, November 30th, 2021, Kingston, Jamaica. Thank you, Mr. Chair.
Thank you, Mr. Williams, and congratulations on the flawless reading of the lengthy report. Let's now introduce the next resolution. The director's report sets out the highlights of the operating results, and I now put forward the resolution as set out in the notice of meeting and the agenda, which reads as follows. That the audited accounts for the year ended September 30, 2021, and the reports of the directors and auditors circulated with the notice convening the meeting be and are hereby adopted. May we have a member propose and another member second that resolution, please.
I propose.
I second the motion.
Now, meeting participants were invited to submit questions prior to the meeting to a designated mailbox and during the meeting via the Q&A functionality in the application. I have reviewed the questions that have been submitted, and there are no questions on the audited accounts. Questions, I should indicate, that relate to the first quarter release will be taken in the general question and answer session later in the meeting. Against that background, we now invite you to vote on the resolution if you have not already done so by clicking the Vote Now button when it appears and selecting for or against on the platform.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
We have 28 votes in favor and 0 against. So, meeting chair, could you declare the result?
I declare the motion carried.
The next item on the agenda is the declaration of dividends, and the resolution is as follows. That the interim dividend per stock unit of 50 cents paid in May 2021 be treated on the recommendation of the directors as the final dividend for the financial year ended September 30, 2021. Would a member please propose and another please second that resolution?
I propose.
I second.
And we now commence voting, and again we ask that you click the Vote Now button and select for or against on the platform.
Selling online is easy. Whether you're self-employed without a business account or a large corporation ready to join the global online marketplace, we have a solution for you. Accept payments via WhatsApp as well as other social media with NCB Payment Button. No website, no problem. Get started in minutes with ready-to-use customizable templates supported by NCB website templates, or sell to customers across the globe in an online mall with NCB Marketplace. Plus, get a pre-approved business credit card. At NCB, we have the right solution for your business to get you online and earning 24/7. Sign up today at jncb.com/e-commerce. Conditions apply.
It's easy to FlexiPay your way with your NCB credit card. Have you been putting off a large purchase because you're trying to manage your expenses? Well, NCB FlexiPay gives you the flexibility to choose how you pay with 0 reasons to break your budget. Simply make the purchase with your NCB credit card. Then visit www.jncb.com/FlexiPay. Enter the details of your transaction and choose the plan that works for you. 0% interest for 3 months or low interest rates up to 12 months. FlexiPay your way today. Conditions apply.
We have 23 votes for and 1 against. Meeting Chair.
I declare the motion carried.
Next to the election of directors. As indicated in the notice of meeting, Article 94 of the company's Articles of Incorporation provides that 1/3 of the board, other than the managing director, that is our president and group CEO, Mr. Hilton, and deputy managing director, that is our group CFO and deputy CEO, Mr. Cohen, or if the number of members of the board is not 3 or a multiple of 3, then the number nearest to 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are Mrs. Sandra Glasgow and Mrs. Sanya Goff. Being eligible, they offer themselves for re-election. And I now ask for a proposal of the first resolution in that regard, which is as follows. That Director Mrs. Sandra Glasgow, retiring pursuant to Article 94 of the Articles of Incorporation, be and is hereby re-elected. May we have a member propose and another second that resolution?
I propose.
I second.
And we now ask that members vote by clicking Vote Now and selecting for or against on the platform.
SMEs are the backbone of our economy, and we're here to help support them through these challenging times. Millions of dollars in funding is now available to SMEs at a special low rate of 6.5%. And businesses with little or no collateral can now obtain support through our various partnerships. At NCB, we believe that every viable business should be able to access the capital they need to adapt, innovate, and grow. Life has been interrupted, but your business plans don't have to be.
Real success starts with trust. Lock into that success today using NCB Capital Markets Unit Trust as a simple way to diversify your investment. With just a minimum investment of 50,000 Jamaican dollars or $2,000 US, we can take the hassle out of your investment experience. Choose to invest in a plan that you can trust to make your portfolio stronger. Speak to a wealth advisor. Email us at ncbcminvest@jncb.com to invest with the pros.
We have 27 votes for and 0 against. Meeting Chair.
I declare the motion carried.
The next resolution, for which we ask that it be proposed and seconded, is that Director Mrs. Sanya Goff, retiring pursuant to Article 94 of the Articles of Incorporation, be and is hereby re-elected. Can we have a member propose and another second that resolution?
I propose.
I second.
Members, kindly vote now by clicking on the Vote Now button and selecting for or against. We have 26 for and 0 against. Meeting Chair.
I declare the motion carried.
The next item and resolutions are regarding the remuneration of the directors of the company. And the first resolution in relation to that is as follows: that the directors be and are hereby empowered to fix the remuneration of the executive directors. Would a member please propose and another second that resolution?
I propose.
I second.
And we now ask that members vote by selecting the Vote Now button and selecting for or against.
Selling online is easy. Whether you're self-employed without a business account or a large corporation ready to join the global online marketplace, we have a solution for you. Accept payments via WhatsApp as well as other social media with NCB Payment Button. No website, no problem. Get started in minutes with ready-to-use customizable templates supported by NCB website templates, or sell to customers across the globe in an online mall with NCB Marketplace. Plus, get a pre-approved business credit card. At NCB, we have the right solution for your business to get you online and earning 24/7. Sign up today at jncb.com/e-commerce. Conditions apply.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
We have 26 in favor and 0 against. Meeting Chair.
I declare the motion carried.
The next resolution in respect of which a vote is sought is in relation to the remuneration of other directors. The proposed resolution is Resolution 4B, that the total remuneration of all of the directors combined, other than the executive directors, for the financial year of the company ending September 30, 2022, be and is hereby fixed at $27 million, which remuneration may include such share incentive scheme for directors as may be determined by the board. May we have a member propose and another second that resolution?
I propose.
I second the motion.
And members, please vote now using the Vote Now button and selecting for or against on the platform.
Real success starts with trust. Lock into that success today using NCB Capital Markets Unit Trust as a simple way to diversify your investment. With just a minimum investment of 50,000 Jamaican dollars or 2,000 US dollars, we can take the hassle out of your investment experience. Choose to invest in a plan that you can trust to make your portfolio stronger. Speak to a wealth advisor. Email us at ncbcminvest@jncb.com to invest with the pros.
It's easy to FlexiPay your way with your NCB credit card. Have you been putting off a large purchase because you're trying to manage your expenses? Well, NCB FlexiPay gives you the flexibility to choose how you pay with 0 reasons to break your budget. Simply make the purchase with your NCB credit card. Then visit www.jncb.com/FlexiPay. Enter the details of your transaction and choose the plan that works for you. 0% interest for 3 months or low interest rates up to 12 months. FlexiPay your way today. Conditions apply.
We have 25 in favor and 0 against. Meeting Chair.
I declare the motion carried.
We now come to the appointment of auditors. Messrs. PricewaterhouseCoopers have agreed to remain in office and we wish to retain them. And so I'll now ask someone to propose and a second person to second the resolution set out in the agenda, namely that Messrs. PricewaterhouseCoopers, having signified their willingness to serve, continue in office as auditors of the company until the conclusion of the next annual general meeting at a remuneration to be agreed with the directors.
I propose.
I second.
And that's resolution number 5. Can we have the vote? Oh, before we take the vote on that resolution, customarily we ask that Professor Wind, now in his hat as our audit committee chairman, speak to a review of the auditor's performance.
Thank you very much, Mr. Garcia. Shareholders, your company is one of the largest and the most complex in the region. And accordingly, its financial systems and its audit processes also are very complex. And this is represented at one level in the 34 minutes that it took Partner Williams to read the director's report, and also in the 200 pages of financial statements that we have before us at our AGM today. A very complex undertaking. Our audit committee looks very, very carefully at the performance of our auditors in auditing the complex NCBFG organization. We do that in a number of ways. We periodically have a structured assessment by the independent directors who are the members of the audit committee and by the management in relation to the performance of our auditors. And those assessments have consistently rated the auditor's performance as high. We look very carefully at the extent to which our auditors at PwC Jamaica interact with other auditors of the various constituent parts of the NCBFG organization scattered across the Caribbean. Those relationships have also been very, very strong and have demonstrated a level of seamlessness in the auditing processes. The record of attendance of our auditors at our audit committee meetings across the group is an unblemished record. The attendance has been optimal. And we also engage in an ongoing process of surveillance in relation to other auditors and their ability and capacity to execute our audit. And in that respect, we continue to be convinced and persuaded that our current auditors are the auditors that are most suited for our organization at this point in time. So those are the various elements of an auditor assessment that we're engaged in on a structured basis. Thank you.
Thank you, Professor Wind, Audit Committee Chair. And in the context of those remarks, we now take the vote on the resolution, Resolution 5.
SMEs are the backbone of our economy, and we're here to help support them through these challenging times. Millions of dollars in funding is now available to SMEs at a special low rate of 6.5%. And businesses with little or no collateral can now obtain support through our various partnerships. At NCB, we believe that every viable business should be able to access the capital they need to adapt, innovate, and grow. Life has been interrupted, but your business plans don't have to be.
We have 26 in favor and 0 against. Meeting chair.
I declare the motion carried.
We at this point would be able to take resolutions in respect of any other business which can be transacted at an annual general meeting, and there have been no resolutions proposed. That therefore takes us to the general question and answer session, in which questions are taken generally in relation to the business and its performance, and including its performance in the first quarter. Questions will be fielded by persons in the room here at the atrium or online. And there may be some questions which we will have to take after the meeting if time does not allow all the questions, or if the questions are better answered individually to protect privacy or for other reasons. And I'm reminding persons that if they have not already submitted questions, they can still do so on the platform. I will start with questions that had been received before the meeting from Mr. Stephen Flowers. And the first question is for Mr. Patrick Hilton. Our group chairman's framework includes using other people's money prudently, and NCB Financial Group has purchased a major stake in Guardian some years ago. GHL was also cross-listed since May 2021, but we have seen a major decline of share price from the initial JSE listing price. Of significance, NCBFG also reduced its shareholding via a sale of shares. What are your thoughts on GHL as a long-term holding?
So we are committed to GHL as a long-term investor. It's a key part of our strategy. GHL is a key asset of the NCB Financial Group. It represents a significant segment of our business. We actually made the investment because we thought that the prospects were good. Quite frankly, since being involved, we think the prospects are even better than we had anticipated. What is happening now at GHL is that GHL, just like NCBJ, just like Clarion, is transforming at speed and at scale. What we have done in the context of the pandemic is to use the opportunity to build new capabilities which will enable us, that's both GHL, NCB, and as well Clarion, to accelerate out of the pandemic. So we have been building new muscles, we have been investing in building new capabilities. And we are committed long-term to GHL. As I said, we see it as a key component and a key asset. The fact that there is movement in share price is, one of the realities of the markets in which we operate, right? And is understandably something that we appreciate, but it's not something that phases us, quite frankly. And our selling of the shares, as I recall, would have been in the context of our cross-listing and providing, some amount of availability of shares in the market for persons who are interested in acquiring the shares and, being involved in our GHL journey with us.
Thank you, Mr. Hilton. Second question from Mr. Stephen Flowers, and this question we will put to Mr. Ravi Tewari, CEO of Guardian Holdings Limited, who is with us online. What are your thoughts on the future investment profile for Guardian Holdings Limited? Are you considering a transition to more equity than debt holdings in the future?
Good afternoon, everyone. What is critical for us as a long-term investor, a long-term institutional investor, is how efficiently we manage our capital. So our investment policy is framed by that, which involves a close alignment of our liability cash flows with our asset cash flows. And this we do very actively, and it is an ongoing process. Naturally, as we do reviews, it causes us to reshape our asset portfolio, and it will continue to happen. But I do not envisage that it will result in a significant shift towards more equities in the portfolio.
Thank you, Mr. Tawari, and I'll stay with you for the moment, if we may. We have a question for you from Mr. David Rose, who is asking that you speak on the ALMI platform in the context of the overall plans for fintech plans of the group.
ALMI is something that we are extremely excited about. As Mr. Hilton said, investment in fintech is critical for the NCB group. Consumer behaviors are changing dramatically in life insurance. They favor new ways of interacting with the insurer and new ways of distribution. So we see ALMI as revolutionizing how we can distribute and offering a modern digital outlet for new sales. I should say as well, though, that ALMI does not exist in a vacuum, but it also represents the significant investment that we have made over recent years in upgrading our digital infrastructure in all regards. So it's testimony to that. The early indications from ALMI are very positive, and we are quite excited by its future development.
Thank you, Ravi. We have a similar question from Mr. Rose for Mr. Vernon James of TFOB, or CEO of TFOB. Mr. James, the question is asking that you speak to Link and that platform in the context of the fintech plans for the group.
Well, Link, we're all excited about Link. What Link really represents is the ability to provide financial services, really, payments, potentially distribute products of other members of the NCB group to the wider public, particularly the unbanked and underbanked in Jamaica. We've had a good start so far. We have over 40,000 people using the app now since we launched in December. And we are in the process of unlocking additional functionality, such as bill payment. Right now, you can do your peer-to-peer transfers easily, fully digital. You get to onboard fully digitally using our app. No reason to go into a branch. And we're unlocking functionality as we develop. So in the immediate future, we have bill payments, we have mobile top-up. We have the ability to cash in and cash out at the ABMs of NCB. So anybody can go in, open a Link account, and add money to your Link account through your ABM. But Link is what we make it. We like to think of Link as Jamaica's app. We are going to develop a full ecosystem of products and services, which will allow you to do almost anything you can think of. Very shortly, we're going to unlock the ability to make payments to larger merchants using our app. And then, as I said, we plan to offer all the different sorts of financial products and other products that you would expect in this sort of fintech opportunity. So you should be excited. We're very happy that NCB is our primary sponsor. And what we will bring to the market, especially to those users not currently in the banking sector, so to speak, is functionality that is currently available to everyone else. So stay tuned. We have a lot coming over the next 6 months.
Thank you, Mr. James, and I'm sure, Vernon, I'm sure you're quite happy that David Rose gave you that opportunity to advertise.
I certainly am.
So David Rose has a question also now here for Septimus Blake, Bob, our bank CEO, and when I say bank, I should say which one, shouldn't I? National Commercial Bank Jamaica Limited. Mr. Rose would like to know what internal policies, practices, procedures, etc., have been put in place in the context of the activities that led to the arrest and conviction of a manager in relation to fraud.
Thank you for that question, David. So I'd answer it by saying this, that we continue to prioritize operational enhancement that contain fraud, tighten up and evolve controls to also identify, quantify weaknesses and close those gaps. And that's a continuous process. I'd also say that greater use in terms of employing, yes, technology, leveraging data, and also employing persons with the requisite competencies and capabilities for these areas. So it's a continuous process. And once we identify gaps or weaknesses in our operating environment, we look to close those. And that's especially important in this environment as we're adapting rapidly. We're changing the business model, and so we have to remain vigilant.
Thank you, Mr. Blake. Question for our head of payment services, that's Daniel Cameron Duncan. NCB introduced its MasterCard prepaid card last year. What has the take-up been like so far, and to what extent do you believe NCB's own team members understand the features of the card and how contactless transactions work?
Good afternoon, and thank you for the opportunity to talk about the MasterCard prepaid. Actually, the take-up on the MasterCard prepaid has been very positive. To date, more than 10%, about 10% of our prepaid card usage is with MasterCard, and that represents over 50% of the purchase volume that happens overall in prepaid. We would have intentionally embarked on an effort to migrate our prepaid customers from our previously issued key card product in order to give the customers additional non-credit-based purchasing solutions and options. So with the MasterCard prepaid, and I'm reasonably certain that most of our staff are very familiar with the prepaid card, customers have access to, like I said, a non-interest card, which has no annual fee, worldwide access, so you can use that card at any point-of-sale machine across the world, online access to online purchases capability, and then the ability to MasterCard send and receive money from cross-border. So a lot of benefits from a non-interest bearing perspective that we're offering to our customers, and therefore issuable for a variety of reasons. So we have personal and individual, obviously, usage for cross-border transactions, and then dependents, so children, lunch programs, issuable for business users, where the employee cards for day-to-day purchases, payroll, gift cards as well. So lots of flexibility in terms of the use of the card in a non-interest manner. In terms of contactless, so let me describe contactless. Contactless is essentially the ability to use your card to tap at a point-of-sale machine as opposed to inserting or handing that card over to a teller or to a purchase at a point of sale. And so you get through that process much faster, much safer. And that has really had quite a significant take-up on our credit card side. Almost 20% of our transactions are done in a contactless manner. On the debit side, it's a little less, it's about 5%, but that's also, we expect that number to grow over time as we migrate our customers to the Visa debit card as opposed to the Midas card, which is not a contactless card. So Visa debit will give the ability to use that much more frequently. So we expect that to continue to grow as customers get used to a more comfortable, easy, and secure way of transacting over time.
Thank you, Danielle. Next question is for Ramon Lewis, our Chief Information Officer, and this is also a question from David Rose. You spoke heavily on, NCB has spoken heavily on technology within the last year and on the spend on technology. But the NCB systems always seem to be overloaded at the end of the month due to higher than normal transaction volumes. The main system was upgraded in May 2019, but Mr. Rose says he is not seeing anything groundbreaking of that nature again as yet. Is it that NCB needs more bandwidth or a better platform to handle payment infrastructure? Merchant, and he expresses concern about the impact on merchant sales due to failures in the POS system.
Okay, good afternoon, everyone, and thank you, Mr. Rose, for that question. Right. So here's how I'd frame the response. Right. So our systems, they're actually running on top of infrastructure from our communication partners, right? And yes, I do admit in recent times we've had some challenges on the payment platforms, right? And we've had to work very closely with these communication partners to address the underlying root causes driving that instability. And we've addressed it, right? And things are certainly better moving forward. And I just want to just add this point, right? And for us to, I would say, improve the overall stability, reliability, and security of these platforms, right? Making investments now to move them to a cloud-based infrastructure, right? And we see that as the future for the business, right? Not necessarily but across the Caribbean, where we look at cloud as the innovator to go and bring us better flexibility, right, with their technology, right, allow us to continue to innovate and improve our platforms, and that will lead to an overall better customer experience for our merchants, but also our customers on a grander scale. So that's how I'd phrase the response to the question, Mr. Rowe.
Thanks, Ramon. Next question, also from Mr. Rose, is in relation to dividend payments and will be for Mr. Cohen. NCBJ, the bank, has been paying more dividends to NCBFG, which goes to supporting interest payments and other activities. However, the board didn't consider a dividend in any form for distribution yesterday. Is it that the board and management have adjudged that the heightened risk from COVID-19 and reducing income attributable to NCBJ is sufficient reason to retain more capital in the group? And could a share buyback be a staple part of your future discussions when a distribution is actually being considered for payment? Mr. Cohen?
Okay, thank you for your question, Mr. Rose. Let me start by saying that we should treat payments of dividends within the group as just a redistribution of capital. A big part of our job is to ensure that capital is distributed across the entities in the most efficient manner. And it should be, so for that reason, I'd like us to look at it in that sense. As I'd mentioned in my remarks earlier, the board has agreed that given the challenges facing us now, our best strategy is to optimize and solidify our capital base, and hence the reason why there's not been any external payments. Certainly, we will continue to assess the environment and make decisions regarding external distributions as we see it appropriate. When that time comes, certainly a share buyback is one methodology which can be considered if we consider it appropriate and in the best interest of shareholders at that time.
All right, thank you, Dennis. Next question is from Ralston Samuels. And this question will be for Mr. Hilton. Apart from the traditional corporate social responsibility, or CSR, how is NCB incorporating ESG, environmental social governance, strategies in its operations, and is ESG on the board of directors' agenda? If so, is this conversation being cascaded to the management team, and will NCB incorporate ESG reporting as it goes forward?
All right, well, thanks for the question as well. Let me say that ESG is on the board's agenda. We have had discussions about it. But I will say that at this time we have not formally adopted or implemented an ESG policy across the group. We have, however, incorporated elements of ESG in our strategy, in our policy framework, in terms of how we operate, in terms of our governance and so on. Just last year, we had extensive training. We invested in training for our directors and key members of management in ESG. And interestingly, the person who led that training, Mr. Matt Rogers, was on Tuesday of this week appointed as the CEO of Mission Possible Partnership, right? An entity, global entity focused on climate change. Matt is an expert, well recognized around the world, and he has been, he worked with us in terms of helping us to get a better appreciation of the key elements of ESG and how we can look about onboarding a formal ESG framework and implementing it within the group. So we'll continue those efforts, we'll continue that work. It is a journey. It will take some time. I can't say at this point in time that we will be formally, reporting on ESG next year, if that's what the question was, I'm trying to recall. But what I will say is that it's a path to which we are committed, and just watch this space, you'll see more about it in the near future.
Thank you, Patrick. As Bob likes to say, it has our attention and intention. Next question from Ralston Samuels. This one will be directed to Mr. Cohen. The cost-to-income ratio for NCB has increased to 76.19%, up from 68.48%. Is management scrubbing every single expense line to ensure that the dollars that we are putting to work are being put to work in an optimal fashion, and that they are necessary dollars to be spent? So he's looking at what are we looking appropriately at the opportunities for productivity and efficiency improvement.
I'd like to start by emphasizing our commitment to managing expenses, managing process efficiency. You'll recall in the presentation, or certainly in my presentation, there's a reference to digital to the core. And at the heart of digital to the core, it's about satisfying our customers and also driving efficiency. I'd also want to add that banking is an expensive business, right? And it requires significant infrastructure, it requires talent. At the same time, I also want to emphasize the fact that in order to address the issues regarding expense management, it requires investment. So a lot of the increases in expenses that we have experienced is related to our investments in infrastructure, investments in talent, and there's also external consulting services we have engaged. We are deep into that journey. It's a big part of our increases in our operating expenses. But I just want to assure you that there is a huge commitment to managing our expenses, driving our cost-income ratio. It's a key part of our mandate.
Thank you, Dennis. And just to indicate, shareholders, that we do have more questions and we are going to be able to answer in this session. So we'll take as many remaining as we can in the next few minutes, and then we will close this section. David Rose has a question for you as well, Mr. Cohen. And it arises from page 5 of the The reference he gives is page 5 of our first quarter release. Why was there a credit impairment loss provision for the insurance segments and in particular of the magnitude shown?
Okay. I think what we need to remember is that the insurance and the asset base of an insurance business is fairly similar to that of a bank. It has significant investments in investment securities. It has investments in mortgage portfolios. It has credit exposures. The IFRS 9 procedures and standards that were referred to by the auditor earlier refers to the insurance company as well. And the ECL computations that were described, those activities take place within the banking group and also takes place within the insurance group. Given the large size of the balance sheet in investments in mortgage portfolios by the insurance company, they naturally would have ECL charges based on the computations and the assumptions that have been determined by management and the auditors. So it's a normal part of their business. We should expect to see it on an ongoing basis. I think when we think of insurance, we think of the insurance premiums and forget about the asset side of their balance sheet. There are many aspects of their asset side which is very similar to a normal investment company and similar to a bank.
All right. Thank you, Dennis. Question for Mr. Blake. Can you comment on the benefits of higher interest rates and rate sensitivity? Comment in particular on the net interest income outlook in the light of the recent BOJ increase in the policy rate. And are you expecting also, and in terms of your loan book, what happens as the interest rates go up? Are you expecting any adverse changes in delinquencies and non-performing loan levels?
That's a broad question. Thank you for that question. Let me comment on it in this way, that there has been a reversal in terms of the Bank of Jamaica's accommodative stance in terms of low interest rates and so on. And they have now started to increase their policy rates. We do expect that over time, these increased interest rates will transmit to our balance sheet and P&L. As to how they will transmit, that depends certainly on the structure and sensitivity of both the assets and the liabilities. And that's something that we continue to monitor. And it also depends on the pace of the pass-through of these increased rates to the balance sheet and the P&L. At this point, we continue to look at those scenarios. Interest rates is just one shift, but there are other shifts that we are calibrating and monitoring as to, what is the transmission channel to our balance sheet and P&L and the potential impact. But there's also the shifting in terms of the competitive dynamics in the marketplace. There's also the shift in respect of shifting consumer attitudes and behaviors. There's also a shift in terms of the risk levels and so on. And so, we continuously monitor and map these scenarios across, as I said, various dimensions to understand the realities for our business.
Thank you, Bob. Next question is for Mr. Cohen from David Rose, and it arises from page 5 of our first quarter release. Why was there such a sharp drop in net foreign exchange gains and investment activities? Was this because the first quarter of 2020 had a sharp rebound in asset prices and a larger than favorable FX gain?
I think you've answered the question, Mr. Rose. Thank you. I think in the prior year, I think there were some significant one-off opportunities which our capital markets unit were able to capitalize on. There were no similar opportunities in the December 2021 quarter. In addition to that, you'll recall there was in fact only a 0.1% devaluation in the quarter of December 2020, while there is close to a 5% devaluation in the quarter December 2021. The combination of the two account for the significant variation in the two numbers.
Thanks, Dennis. And as I had indicated before, there are several more questions than we would have been able to take during the time allotted for this segment in the meeting. And so we are unfortunately going to have to close out the Q&A section now. All remaining questions will receive a response from our investor relations team. And the questions were taken generally in the order in which they were received. Before I hand back to you, Mr. Meeting Chair, just to indicate that there was a slight correction in the announcement that I made regarding the outcome of the vote on the last resolution. I believe that I said it was 26 votes in favor, and I understand that it was 27.
Thank you.
I don't think it affects what you declared.
No. Thanks very much. Ladies and gentlemen, that concludes the business of the NCBFG annual general meeting. It just remains for me to execute the very pleasurable task of saying thank you. I'd like to start by thanking the organizers of this meeting and also our external service provider. Often these meetings, the individuals who actually are doing the work to get the meeting going, they go understated, and I really want to recognize those individuals. I want to recognize our diligent movers and seconder, Jackie DeLissa and Stephanie Nita, because they have not only been performing this role, but they perform many other really important roles across our organization. I want to recognize our chairman. 20 years is an important milestone. I think it was March 2002 that AIC acquired NCB, and Chairman Lichin has been an exemplary chair for our organization. So I really want to commend him on that 20-year period of stewardship of this organization. And our other directors who, I can say, having had a front row seat at meetings, have been very diligent during the course of the year. So I want to recognize all of our other directors. And one of our directors who resigned during the course of the year, Mr. Adrian Lichin, I want to recognize him for his service to the NCBFG group. Team members throughout the organization working extremely hard to keep this NCBFG motor running across our region. So we want to recognize all of those individuals. And then finally, our shareholders. We certainly appreciate those of you who have come to our meeting virtually, who have taken the time to answer questions, who have been very concerned about ensuring that they get the accountability that they need from our organization. And we thank them for their patience. We recognize that in the face of this pandemic, we have not been paying dividends, which is an important element of the return that shareholders expect. And we thank you for your patience as you recognize that the growth prospects of this country and its regional scope really represent a tremendous opportunity for you to continue to benefit from your NCB shareholding. So we want to thank everyone very much. Wish you all a good day for the rest of the day. And I would now at this point in time declare this meeting terminated. Thanks very much.
what you want to do more of, and it's not waiting for life to happen. You want to explore more. New worlds, different passions. You want to share more. Amazing experiences, knowledge. You want to care more. For yourself, for the people around you. We know you want to do more things in life, so Clarion does more for you. In choosing the right experts to meet your every need. In products and services to reach your goals. And now, we do more than any other bank, digitally. Empowering you with new technology in the hands of best-in-class professionals for more convenient digital tools, a more seamless banking experience, and more precise financial solutions. Clarion does more to bring you, your family, or your business into a new world of banking so you can do what you really want, to live more. Clarion.
The first sound they make is to simply let the world know they're here. And then it's our duty to help them show the world why they're here in the first place.
Give them every advantage with the Guardian Achiever, a plan that provides for their educational dreams and protects their health and life in the process.